Ah, Okay. I am live, checking audio, checking audio. Cool. Oh, sorry. It took so long for me to get this up. I thought making it. Oh boy. Thought making it on the plane was going to be cost effective or time effective. And then didn't quite work out. So whatever. Here we are. Okay. Just give everybody a moment to kind of get in and get active in the stream. Hey everybody. Um, all right, all right. So I think I'll just kick it off here and work on it from here. And we can talk. Okay, cool. So if you guys are, been locked in on markets the past week change or so, you've noticed that a ton of stuff is going on. So let's kind of what I like to do is I like to approach the market every week, go over what occurred last week, and go over what can be continued into the following week and what maybe needs to be readdressed or pivoted going into the next week. We're going to talk a bit about like what's going on, some points that's really been changing. Like honestly, unprecedented stuff. It seems right. So if I zoom out and I start with the macro side of things, and we talk about and if it's your first time joining the live stream, uh, like I just said, I go over what happened the previous week. I'll talk about what could be happening this upcoming week, as well as what trends may develop into the upcoming, month or range or so. I like to use a lot of data to kind of either confirm or deny some of my ideas and thesis points. And I also use um, large bank data. So individuals like Bank of America, Goldman Sachs, not individuals really, but institutions like that at that size, they have teams with hundreds of millions of dollars of people on payroll with resources up the woo-ha. Um, and a lot of times I can source ideas from their research on trade ideas, as well as I can confirm some of my external research through them coming in with their ideas in addition on top of what I've already compiled individually, right? Um, so what I would say is in this focus, I did not spend too much time in the market this week. To be quite frankly with you all, holiday week, all of it, work. But I'd say personally, the main story is metals, and more specifically, the main story is silver. And I actually just got a notification just right now, about silver, and it seems like there's some pretty crazy stuff going on. So we saw silver, bless you, we saw silver step into what looks like highs as of recent, and it was truly insane, right? Like let's take a quick look at it if you're here with me. So right here we got silver. Um, this is the futures of silver. And the main thesis behind why silver is currently running is because if I do a quick history lesson, real quick, actually, um, it was simply because back back in the day, like some historical context, we had we had a period where in from like 1792 into 1870s and beyond, they used a thing or a concept called bimetallism, which is um, where one metal meant the another red metal, right? So there was a fixed exchange ratio between the two of 15 silver equal to one gold, and that was back when the monetary policy said that gold and silver were legal tender, right? And then when did we, I believe, break it down? I think we had what else? Yeah, so that's bimetallism, right? So at that point in time, they moved in tandem with one another, right? So if silver appreciated a little bit, gold would also appreciate to reciprocate that amount of value, right? And it kind of was ingrained in humanistic psychology and beyond to be able to like keep the balance of the two metals, right? Um, the core problem was that the bad money was driving out the good money, so the ratio created issues with different marketplaces and all that stuff, and the system tends to collapse because people really wanted the gold as opposed to the silver because it was 15 silvers to one, right? So it was used up until like the 1870s. Um, and then in the 1890s, when like there was more of an issue, they pushed a movement of free silver, where silver was its own as opposed to gold. All that, but all that to say, basically, it held until the late 1800s, and then fiat currencies came into place in the 20th century, which is what we know now as the U.S. dollar, right? So if you take a few seconds and you just go on Google real quick, you could look up the silver paper dollar, right? Because at one point, the US dollar was backed by a currency, and that currency was silver itself. So they were known as silver notes. Um, so literal paper, and some of you guys may know a bit about this, but boom, it's right here. The silver dollar, right? This is what we had way back when. Because effectively, the US dollar was backed by the metals themselves. It was backed by silver, it was backed by gold. So we had dollars in place that were backed by silver in this case. So as you can see in this image, hopefully you can see it. Yeah, in this image, it was one silver dollar, right? And that was a huge thing until the US government realized that they could effectively print infinite amount of money if they don't back it, meaning that they don't have to essentially pay their debts or import more gold, import more silver to be able to balance that ratio that we just talked about, right? And they said, hey, we don't need to be backed by anything. No metals need to be backed. We're just going to be backed on the faith and the good of the U.S. government and the fact that we are a powerhouse, right? We won. Oh, yeah, for sure thing, Dimes. Um, we are backed by the U.S. government. We are the greatest country in the world. We just won World War II. Um, you know, all that comes into play. And at that point, our debt, the debt that we issue to service the government, to pay governmental contracts, to make sure our roads are paved, um, we issue that debt, right? And then the country creates money, we create money, we create money, people go to work, businesses create more products, create more services, they make more income. We then tax those businesses, we tax those individuals, and then the US government creates that income for itself and then is able to pay off its debt to the debt holders, the people that own the US debt, which are bonds, right? That's how bonds work. Um, and you can be a debt holder to the United States. So what they decided to do is instead of backing it by these metals that we had to continuously buy to be able to move in and out, they're really cumbersome, really heavy movement things. They figured let's back it by the good and faith of the U.S. government and the fact that we're the number one nation. We have the best debt products, giving out the best yield. Everyone wants to be an American. Rada rada XYZ ABC, right? Cool. All the big spiel that we all know is currently questionable in truth, right? So now, what's the problem? Why is silver up currently so much? And it's simply because, right? Why in the year we are up? What are we up this year? Over 170% this year, as you can see here. We're up 170% this year, alongside, and it's not just silver too, right? But I'm drilling in on silver specifically for a mechanical reason. Gold as well. Gold's having an astounding year, up 70%, right? For perspective, the S&P 500 is only up around 20% this year, right? So, and you also have copper, other metals. I don't think copper's done as good, 44%, right? Still great appreciation over this year. And then if we even just talk about platinum, what's going on over there, 167% on platinum, right? So this is because the US debt has continued to pile over and over again. And then, honestly, I remember being in middle school and talking about the US debt being an issue. Like, okay, whatever, I guess we owe money, like, whatever, like, what does that matter, right? It matters in this case simply because at this point, we have surpassed, like, there's so many things that have gone into inflection point, right? We have gaps in funding in our institutional and, like, very integral parts of the US government, right? Programs like Social Security are currently underfunded. There's questions at hand right now as to, like, how much longer can Social Security as a program actually work in its current state, right? You also have the current Republicans in the House and in Congress fighting to reduce Obamacare's subsidies. Why? Because those subsidies are expensive, but the US government is choosing to put other things in precedent as opposed to the health of individuals, right? So that's another piece. Um, there's a whole bunch of things. And then because of that, the US dollar has decreased in value. The US dollar has decreased in value. So if we look at the year on what happened in the US dollar is down 10% this year, 9.84%, on top of the inflation that we're already experiencing of 2.7%, quote unquote. We'll get into what that means in a minute, quote unquote. Right? So if we were to put this whole pieces together, right? Effectively, the $100 that you owned last year, December 28th, 2024, is currently worth somewhere like $90 or $86 currently, in terms of how much buying power you actually can use to purchase of, right? To purchase specific goods or services as you go about your life, paying your rent, paying your groceries, doing all the things that we all need to do to survive, paying our energy bills, right? Um, and it continues to compile and it continues to have this big burden on us. And all these years from 2008 and beyond, as you can see, these metals have been in a dormant place in a way, right? So if we were to look at, oh, sorry, this is Bitcoin, gold. If we were to look at, what gold has done over, really since 2008, as we go back here, right? Since 2008 and that crisis, right? Went from here, we pushed up about 100%. But all from that point, from the point that we signed Dodd-Frank and kind of went through this consolidation period, this past decade has been a lost decade in gold, amongst other metals. It's been anywhere between 1800 and then sunk down into 1300, like down 30% roughly. And this is 3,290 days of basically sideways movement until now recently. What happened? We had the rates get jacked up because of COVID. We need to raise interest rates to be able to slow down the spending and slow down the economy after injecting it with so much stimulus money that we did because of COVID. That then ultimately that money found its way and trickled into other assets that don't move as much. Great. So stick with me. Let me know if you have any questions also, please, right? I'll help. I'm trying to, like, mesh the whole story together as quickly as possible because, but even though this is like a 300-year story. So um so all that happening, right? All that happens. Then we have the Fed funds rate, right? Which is essentially meaning how much it costs for you to go out and get your debt, right? How much is it going to cost for you to go out and buy your home and buy your car note, right? Such and such, right? That's a very blanket statement to it, but that's roughly how that works. Um, One second, I kind of lost it here, right? So if we were to talk what we just talked about with gold and how that was a lost decade in what was going on, we had the crisis of the 2000 crisis. Keep on losing the stream. Be work. What do you mean by that? Be work. A lot of these metals have been a part of have been huge. mm, be worth other. Yeah, I mean they're worth a lot. A lot of these metals are worth a lot, and it's because of the current worth different amounts in different countries. Oh yeah, for sure, for sure. The everything, almost anything is worth a different amount in different countries because there's a different market there. There's different individuals there. There's different personalities. There's different needs and wants of that demographic of individuals. Um, if you guys are a bit known of Sam Bankman-Fried, the guy who did FTX, if you remember that, the Bitcoin exchange, the crypto exchange, um, he made his first roughly 100 million plus by doing what is called arbitrage, which is where you buy in one market and then you sell in another market and you collect the spread because there's a difference in people's opinions in the different markets. They use buying Bitcoin in the US and I believe selling it in China because people in China valued Bitcoin much, much greater than the people of the US did. And it was very like obviously frowned upon at that time in the US as like this magical digital illegal currency that was connected to Silk Road and all these X and pieces of like question mark of like how much of this actually is worth anything. And the people of China found great importance in this crypto Bitcoin and said, hey, this is actually worth a lot. So there were times where he was buying it roughly for, let's say just round numbers, $1,000 over here and then selling it a cool 10%, 15% markup in China. By just facilitating that movement, he was able to collect 15%. The same way how we put on a trade and we aim to gain 15, 20%, or whatever that case may be, he was effectively doing the same thing with Bitcoin. So, yes, metals can be worth different things in different countries. Same way how a barrel of oil is probably worth much more now in Venezuela than it is currently here in the United States because of what's currently going on in the news, what's currently going on with the Trump administration and their decision to seize their oil tankers, right? So this is kind of where also like just in the future is like a heads up why the news is important, why politics can be important in markets. Although I am not necessarily one with extremely political views, I find myself to be a very independent thinker of how certain things and pieces should work and work in together in culmination. But um, but there are instances where news can help drive markets and it changes a ton of things, right? So quickly back to the metals conversation. So because what we saw in the Fed funds rate and what happened with gold, as you can see, the Fed funds rate, the cost of borrowing money went to effectively nothing. It was super cheap to borrow money. Um, it was no real issue, no real question mark on like how much it was going to cost. So that's why also gold stood still. And that's also why the debt didn't matter as much as it does today. Because guess what? The same Fed funds rate determines how much money the US government has to pay back to their bondholders, back to the people. Remember, we talked about this when they dropped the metal being the backing of the US dollar and they said, hey, it's going to be based on the good faith of the US government and we'll just pay you back. Don't worry, right? Once they did that adjustment, now they have to pay the amount that the Fed funds creates. And that's when Jerome Powell goes up and talks about, oh, I'm going to cut or I'm going to raise a quarter basis point, and we're looking to maintain monetary policy and we're having two main focuses of stable wage growth or sorry stable job market and low inflation as their mandates, is what they're focused on doing. The independent of the Federal Reserve, what their processes of doing. Um, and then recently, to get out of COVID, to get out of the surplus of money that we spent, and how like the flywheel of just flipping over and flipping over and flipping over, we had to raise the federal funds rate, and we went all up to 5.5 or 5.5% roughly, or five and roughly 3 quarters, I guess, or 2 quarters, or a quarter. What was the high here? 5.33 was the high, and as of recent, we have been cutting, cutting, and cutting, cutting, and that's been kind of better for our policy, in terms of like how the government's able to repay its debt. Not necessarily better for the economy per se, where we need to grow our GDP as much as we do, but it's definitely something, that I think, actually, I mean, lower rates does end up being a positive to the GDP roughly. Um, because lower rates equals more spending. It really just does depend on how much of that spending is coming from domestic spend as opposed to external spend and imports and such. So I'd say that is another, important piece to kind of keep an eye out for. So what we've seen is metals have jumped. Why? Because the question of if the U.S. government is going to actually pay back its debts is currently still again in question. And then second, the mindset of individuals, and saying like, oh, when we had bank runs back in the day, where banks were not, or didn't have a full amounts of money of people, along with these new policies that are creating, like, such as fractional reserves, right? The bank doesn't currently own all of the deposits. It simply just, has enough money and reserves in some instances to potentially cover the withdrawals and that they may have over a period of time, called fractional reserve. Um, the Dodd Frank, which was, I believe, I'm not sure what it's actually, or what it is in technicality, what Dodd Frank was per se, like if it was a law or, um, hold on. Let's see real quick. I'm just trying to give you guys the proper information. Yeah, so basically, um, the main thing is that the reserve ratio, it might be 10%. So if somebody deposited $100, that means that the bank can now lend out $90 to another person so that it can generate income for the bank, right? And the same way how they can do that is the same way how they'll give you 0.01% on your savings account, and then go ahead and loan that out to somebody as a loan for their mortgage, and collect 4 or 5, 6% on their mortgage, and they can collect on that spread because they took your savings account of 100 grand and then basically said, hey, we're going to loan out 90 grand of that, right? Assuming that you're probably not going to get the deposit soon, but also that, or assuming that you're not going to withdraw most of that soon, but also that somebody else will be there to deposit to cover you, right? To cover that deposit that they just took out, to be able to, if you did want to come in and come get your 90K or your 100K, right? So, there's different rules and stipulations surrounding that, as well as there's certain backstops, such as the FDIC insurance that we all have, for a lot of checking accounts. A lot of banks are doing that. I think the industry standard is going to step up in the FDIC insurance into somewhere close to maybe 1 million to 2 million. So in some cases, 5 million FDIC insurance, based on the deteriorating things that are happening in the macro sense. Um, and that was all to basically try to limit bank runs, where basically means that, like, oh, a bank's going out of business, everybody is going to go withdraw their money, everybody and all at once, and that shock to the system can cause major pain, such as, what recently happened with Silicon Valley Bank. when Silicon Valley Bank went out of business because they had some slightly shady issues and certain things that were going on with their risk assets. A lot of companies that banked with that bank had some issues with getting their cash out. More companies decided to step in, get more cash, more cash, right? And then they end up in the hole of not actually having the cash to give their depositors. Ultimately, US government generally steps in and forces another bank, or maybe not force maybe too harsh of a word, but implies that another bank should take care of the tab and buy the bank. And then that way they just bought the services of maybe 100,000 people or 100,000 businesses that then they can go ahead and sell services and products to then make money off of their funds in the same fractional reserve way in XYZ rada rada. Right? That's why silver, gold, other metals are going up. Alongside the fact that these metals are still being used for infrastructure, things like aluminum, things like copper, right? The US government stopped minting copper because of how much the copper costs on top of its industrial use. Gold doesn't really have that much of an industrial use. It's more of a like a jewelry use, right? Like jewelry is the main thing as a use case for gold. Um, there are some utility uses for gold in some cases, but a lot of technology and a lot of infrastructure is built on these aluminums, on silver, on that. So the monetary structure of the U.S. government currently being so indebted, as well as questions about their ability to pay it back, led individuals to stop holding US dollars as much as they currently did, to now hold other metals such as gold, silver, right? Japan, one of our biggest bond holders, they own, I believe, over $900 billion in US paper bonds, and China being second. Um, Late last year, I wrote a report on the Chinese central bank and how much gold they were holding, and they continue to hold more gold, and they continue to stack up against it, right? As well as the BRICS alignment, which I believe is the Brazil, Russia, India, China um, alliance, where they're basically saying like, hey, we don't need to transact in US dollars anymore. We can transact in our own local currency, or maybe even get transactions in denominated in gold. So we don't need the US government to be able to be the facilitator in our transactions of maybe Saudi Arabia buying oil, or sorry, China buying oil from Saudi Arabia, or doing these big national level transactions that are usually used to provide the U.S. government income alongside interest income, alongside taxpayer income from the U.S. government, right? So as these things start to come into question as to how the U.S. government is going to make income, this is why Trump, I believe, is very, very focused on tariff, alongside the fact that he is, and he has some autocratic ways in the way he plans and tries to lead the country, the U.S. government, that is, that the tariffs can, in some way, shape, or form, provide a financial cushion, a little bonus, a little cheddar in the pocket to try and help cushion the balance sheet of the US government in the meantime, while he makes these crazy austerity measures of cutting, 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 and more cutting of programs, and then re-siphoning that money into things that he believes are national security, like selling off pieces of our land to these to countries, or to companies that plan to mine the earth to be able to go get our resources from that, as opposed to preserving these lands in the national parks, right? And other bits and pieces, same thing with oil, right? Drill, baby, drill is a major, major concept of the Trump administration, that he's gone fully in on fracking to be able to be self-sustainable. And in a way, he is so, quote unquote, I would say, correct in the fact that we do need to be more self-sustainable and a little bit self-reliant, or a little bit more self-reliant with the things that we need as a nation. I'm not necessarily potentially in agreement with the extent that he's willing to go to create that self-reliance, stating national security being a huge, huge risk. Um, and I am, but like it's a very torn concept for me as an economist, as somebody who's deep into markets, as well as somebody who is a human. And there are things that must be preserved, and ethics that must be maintained. Um, it's very difficult in a sense. But again, not to get into politics too deep, well, I'll probably leave it at there. But the concept of metals have gone, right? And they've rallied significantly. And over the years, because metals haven't been a thing, the banks have gotten away with shorting it, and effectively meaning you're making money as the asset decreases in value because you borrowed against it, right? Um, and these banks have these large like multi-million dollar positions, multi-billion dollar short positions on these assets, that when a price goes against them in certain cases, as we've seen here, I can show you, is when price goes against them, they have to unwind those positions because now they're at a loss, right? And when they're at a loss, to actually close a short position, you have to sell. And or you have sorry, to close a short position, you have to buy. And when the market in totality is bullish for an asset, as well as you closing a short position and forcing you to then buy, it creates a market dynamic such as known as a short squeeze, when it becomes a outsized imbalance in buyers as opposed to people that are selling, and then the asset itself dramatically appreciates over a short period of time, simply because of the huge and like the massive buying pressure that occurs with it. So that is also a huge, huge market dynamic that has been a major, major piece into the rally as to why some of these metals have increased dramatically. Alongside the largest banks of the world, such as China, buying at a clip that's insane. Um, I'm trying to find my report here that I wrote up on. Um, so, so I was able to kind of um, is this one? Nope, not this one. I will figure that out, and I will be sure um, to put it our into the notes below, maybe as well. So ultimately, as I've mentioned before, if you guys are interested in really, really learning and understanding markets from a holistic approach, feel free to give me a subscription or subscribe. Sorry. Feel free to follow me on Instagram at Nedrick, Nedrick, is my Instagram. My Twitter handle is Nedrick, I believe, .hm, or just Nedrick HM. I tend to write a bit there. And I also have a WAP and Discord of other pieces that goes over tons of things in real time, um, so that you guys, anybody willing and wanting to learn about markets and what it does and how it works and in its totality, and really wants to kind of turn up in that fashion, feel free to sign up. There is um, there's a promo right now that I'm doing for New Year, right? Anybody looking to do some New Year focus on things, you can sign up using the promo code NEW. Dang, I can't spell. Sorry. New Year 26, and you will get 26% off um, on the data services that I offer, as well as the information. So that's the big macro point. Let's dive into what's going on right now, and let's talk about what happened. So futures have opened. Um, Futures opened, and we can kind of do some markups as well as talk about. I did not host a live last week, um, but what was it? Yeah, I did not host a live last week, but just recently before that, I did go over a bit of things. Um, I did go over a bit of things, and we can definitely step into that right now. Um, the queues have been a point of interest for me for really quite some time. Focused on Qs, which is the index for the Nasdaq 100. QQQ is the ticker, basically. That's been a big winner. Just trading that in and out roughly. I've been also pretty focused on this arm short that I liked. Um, Been short it since left in this position to hold into still currently one of my main positions. But as of right now with futures, I believe futures opened on silver being up 6%, basically at the beginning of this live stream. And then it went on to that entirely so far. So excuse me. So far it opened at what did it open at? Opened at $80 flat. There's been a few going over a few pieces of things, basically saying like, hey, the CME, which is the data group that manages a lot of margin requirements for when you're trading, they raised the margin requirements for a lot of accounts. I believe from a 22K margin requirement to 25K. So I was kind of expecting some volatility or a lot of volatility in this, especially because of an asset it is. Um, and we can see that currently with really just like what's going on um, in markets and what we've seen as well with positioning. So getting busy, had to stop and check in with the agent. Hey, what's up? What's up? What's up, Cody? Happy you could join, my brother. We're just talking a bit about markets right now, what we're seeing with positioning. Um, so some of the things that I wanted to go over as well was some of the options flow that I saw. Um, so if we were to like use the options flow, um, the way I kind of use it, I guess is another great company here that we CLF. They are a company that mines steel. This is the position that I'm currently in, and like where I am, like positioning surrounding it. I reached PT1 last week. I did some trimming on the position. We're still looking to hold. I'm looking to try and see if we can get to 15 range. It's not doing bad per se. It's also not the greatest, I think, of a position right now, just because it's taken a bit of time, but it's appreciated really well over the past week change, up 6% over the week. And I'm extremely grateful for that. Names like CPER, the Copper Index Fund, are also doing really well. I do not have a position on this, but it was something that I was looking forward to try and see if I can potentially have a position. So that's why I have it in the watch list, just looking around. NVO is another name that I really like. I think this one may very well be a huge theme heading into the next year. Um, we've we've got um, so they had a few announcements that came through. FDA approved this once daily Wegovy pill for the oral usage of GLP-1s and weight management, and it's looking to launch January 2026. Alongside in some sweepers actions that I've been seeing, lots of people looking to put money in for the long term, and I've kind of been on a watch for this for quite some time here, because if you know one thing about human psychology and where people's money goes as an individual, um, I'm going to sound a bit crass here, if that's the proper word in this case, but a lot of people place a lot of money into appearance, right? As a potential discretionary usage of money, appearance, a lot of money goes into it. And second, obesity continues to be a problem here in the United States, and it seems as though that the and we talked about it last week, actually, or last stream. I showed it on last stream. If you did not watch last stream, please give it a look. There's probably 2 hours of me talking there as well. Um, oh, sick, D Mike. Yeah, NVO on the watch list. Yep, it's great. Um, the the concept of people placing tons of money into their appearance, one, and then secondly, placing a ton of money into right into fighting off obesity as a major, like, large scoping issue right now, as the U.S. government, and as the U.S. as a whole. And they're going to iterate on these different drugs, right? They're going to probably make smaller dosages and then find their ways to put it in the systems of children next, right? Um, because childhood obesity as well is an issue, right? So as this drug continues to get more history, more market reports, more scientific research coming out backing it, it's only going to grow and grow and grow, similar to what we saw with the large growth of what was it? Of ED drugs. Um, what's the name of that major one? Geez, I'm forgetting it right now. And ED stands for erectile dysfunction, if you're not aware of it. ED drug. Geez, come on. It's Viagra. That's the name. Cool. So when Viagra became a thing, right, and it got approved by the FDA back in '98, and like what it was trying to help solve for at the moment in time, um, it became a quote unquote industry standard. Then, in that case, the interesting thing that I've learned in the pharmacy industry, just learning and taking time to read and see, as well as in financial reports of these companies, is that once it becomes industry standard, all the doctors are in a way inclined to continue to prescribe it. And it, again, in a way that the U.S. government's debt continued to flywheel as we went off the gold standard and different bimetallism respects that we left in the 20th century or prior to that in the 1800s. Um, Same thing happens to these drugs. They become a flywheel of dependence, of prescription, of utility and usage, and GLP-1s are still in its infancy stage of
of usage and utility for the greater society, right? Um, and I can only imagine what's going to happen potentially as these drugs continue to get more and more and more research backing its growth, backing its ability to help and provide these things for individuals, and then it grows into a global, a real global usage of these drugs, um, and and I think with the I'm trying to find the historical price to back when GOPs first came out. We saw a huge increase in share price, obviously, right? Um, and I believe we traded at 34 or 32 times earnings when we're up at $140 a share during the height of like mid 2024, June, summer 2024, as this GOP1 thing was kind of like breaking out and it was a great thing, XYZ, rada rada. Um, and and that and that we've come down now aggressively with that point of view. And, and we've come down aggressively now into something that's somewhere closer to $13 price to earnings ratio. And because of that, it starts to become a question mark. It doesn't really make too much sense to me personally as a company where the price to earnings ratio has decreased as much as it is, with the share price, meaning, right, the share price decreasing as much as it has, simply because their earnings have continued to increase. The company has continued to grow overall in totality, and its earnings alongside that has continued to again as well, um, just begin to grow. So, so if we look at it from a fundamental point of view as to the stock market, right? The price of a company, the share price of a company, is directly correlated to its present and future cash flows summation, right? So if a company is has a high ability to grow, um, as well as a high ability to currently make cash, then in my opinion, the company's price share should not have decreased, right? So it seems like a lot of that was built around hype. A lot of that price that we saw of $140 was built around hype and the future possibility, as well as the question mark as to how much would this company actually grow, with the fact that GLP-1s are still relatively new to the marketplace of drugs, and how well will it be actually received by the prescribers, by the decision makers of our society. And as of right now, it looks as though it's continuously getting more and more accepted, with more doctors and people prescribing it to individuals to solve these larger issues that we're facing. And then secondly, it's also getting FDA approval, all while its earnings have continued to remain elevated. And they've been able to, like, if we look at just this graph here with the income statements from that Q3 time period of revenue of 10.5 billion, revenue has continuously kind of stayed elevated in this case. And the real main and only question is net margin. As that net margin has continued to decrease, I'm pretty confident that that is directly correlated to the actual amount of spend that they're putting into more and further research and development to try to do this. But as you can see here, right, the diabetes and obesity care has continuously grown in revenue year over year, from 14 billion in 2018 into 39 billion in 2024. And in all honesty, I can see this potentially stepping into 50 billion, um, as we one close out this year, and then we two get into the approval that we just spoke about. So if I quickly kind of show you this one. Um, we talk about this real quick. I'll go to this. This is the integral vote. Cool. Um, so if I go and just search up NVO, just try and see all the points of me talking about it. So this is me basically just mentioning, hey, the Wegovy pill was approved by the US, the first oral. It's looking like it's expecting to launch in early January. So if it launches in early January 2026, the way I'm viewing it is it launches early January 2026. It probably still needs about a month to 2 months really to get the manufacturing down to actually be able to ship it out and actually be able to be in customers um, prescription deck to receive, and then probably needs another month to quarter for us to start seeing the full effect of its revenues coming into the company, and then effectively beginning to help shift and change sentiment and perspective of the company as to why it's currently down at $40+ a share, roughly, or currently trading at $52 a share after the spike of this approval notice that we recently saw. Um, excuse me. Um, and another thing I like to do to try and help confirm this is I check what I call options flow. I look to see where large money is going to try and marry the data in a way, what I like to call it. I call it marrying the data, which is where I check the charts. I check to see, price valuations. I check to see the company's health fiscally, right? Is it a growing business? Is it a failing business? Um, are they looking to make changes? Is there potentially new management that's looking to change the sentiment or the point of view and the perspective, right? Is the point of view of the masses of the society to say that, hey, this company is more important to us to tomorrow as it was today, right? That's a very important concept that I ask myself continually every day in the markets. I say, hey, is this news is this news going to potentially change someone's point of view to say that this company is worth more today or worth more next week, next month than it is currently? Is there enough, you know, gravitas? Is there any gravitas to the news, to whatever thing that's occurring that can change somebody's point of view to say, you know what, this is actually important, right? So similar in the case of, if you follow sports, when a blockbuster trade occurs, right? Blockbuster trade occurs. Let's talk about actually Brooklyn Nets. When the Brooklyn Nets had Kyrie Irving, KD, and James Harden, right? And they were able to put together that crazy deal. And it was like, oh my gosh, like they were trash before, but they were able to collect all these pieces. They got Kyrie from Boston and all this stuff. And then out of nowhere, the perception of the Nets became championship contender. And what occurred? The valuation of the Brooklyn Nets increased dramatically because of that. The same thing happens in the stock market. The same thing happens in the real estate market. This is a natural phenomena of what we call markets as a whole. It's a auction house of perception and current value. And there's a pendulum that tends to swing between one side and the other, where it's actually worth this amount. Oh, we don't think it's worth that much at all, really. And then it continues to go back and forth. And it's up to you, it's up to us as market players to understand which side of the pendulum are we at. Are we at the pendulum? Are we at the piece now where the Brooklyn Nets just came together, they make it to the playoffs and they're actually on a roll, they're looking good, Kyrie going stupid, whole bunch of stuff going on. Um, and because of that, um, we see the perception of the Brooklyn Nets becoming, oh, they're top team in the league, into what steps into, Harden got injured. Oh, Kyrie doesn't want to get the COVID vaccine, so now he can't play because of these other rules and other stipulations and other things, right? And out of nowhere, and then also they don't really get to play with each other on court. So then now it starts to become Kyrie's team for a few months, and then KD's team for a few months, and what we thought was going to be three mega stars on a singular team being able to put together and do some crazy OKC stuff back in 2012, back when three young guys were able to put together a playoff run into the finals. It starts to look like, are we ever going to see them play together? Are we ever going to like actually see them compete at an extremely high level? Like, what the heck? And then they get traded off. And then the Brooklyn Nets get relegated down to nothing, bottom of the table. And then that's the truth of markets. That's the truth of markets. That's what happens, right? So that's the question that we have to continually ask ourselves a lot of times. More specifically, if you're interested in trading over a longer period of time, right? And if you're trading over a shorter period of time, 10 minutes, 15 minutes, 20 minutes, that question is even more impactful because now is this going to change the price of it today? Is this going to change the sentiment of it today? Right? Um, and I tend to focus on a little bit more of, is this going to change the perception of it a little bit over time, whether that's a month, whether that's 2 weeks kind of range. So yeah, but if you guys just give me one moment here, I'll be right with you. I guess we could take a quick 2 minute intermission in a way to just, if you have any questions, please drop them in the stream chat and I will take a look at them right away. right? So we're back here a little bit. I'm getting a bit parched, so I had to get some water. um, so let's see what questions we have. Do I think the U.S. could begin to use stable coins for treasuries? Yep. Yep. Um, I think that's a very that's a developing story right now. Um, I believe because as the in the way that the Genius Act was written, which was the recent legislation that was passed to help actually provide an infrastructure framework to crypto and more specifically stable coins. Um, what I've seen is that the current issue is that the US government currently wants to disallow crypto exchanges and platforms that are issuing their stablecoins to be able to offer a interest yield, um, stating that it kind of is a competition right now with banks. Um, excuse me. And when you think of how corporate works with what we just talked about with banks, fractional reserves, right? The fact that they're going to give you 0.01% of your interest and then loan your other 90% of your savings account into other people and then go collect 4% over there and then be able to collect the delta spread of 3.99%. That's effectively the same thing we talked about earlier in the stream. We talked about arbitrage, where we took Bitcoin from the U.S. Price and bought it in the U.S. market and sold it in the Chinese market potentially, or any other market, India's market, Russia's market, whatever, whoever, or Brazil's market, right? The banks are basically one of the biggest users of the arbitrage method. They take money from you, individuals, businesses that are depositors looking for insurance because they're backed by the FDIC, and then they go loan it out and go collect a huge spread. Um, but I know as of right now, Brian Armstrong, CEO of Coinbase, is currently fighting the Genius Act because they are looking to reopen the Genius Act and instead of honoring it as it's currently written, allowing these companies to offer interest on their stable coins, um, and basically saying that the government wants to reopen the Genius Act to then say that stable coins cannot offer a yield. And Brian Armstrong says that that's incorrect, and that's not fair, and that's not how we should honor it because that's not how the Genius Act was written. But the problem is, if they leave it the way it is, exchanges like Kraken, Coinbase, and all the other 15 umpteen exchanges, they're going to suck money out of the US bank and go into stablecoins, um, which is going to be a problem for banks, right? Because they're already on a fractional reserve scenario. Um, and and it could definitely create some issues for them in the long term. Now, again, on the basis of treasuries, that product is very um, touchy, very important to the monetary system. So I don't really see, and I could be wrong here, right? But in the probability of things, I don't really see that happening in this presidential term. A lot of things would have to be done beforehand to be able to pave the infrastructure way to have this ready, right? Like stablecoins have been around for quite some time. Companies like Tether that operate offshore, um, and USDC, known as Circle, right? Those companies are just gone IPO, um, and they're some of the largest networks, right? So I think we have to go through the system of okay, tokenizing stablecoins, or stablecoins issuance, and then what's next of what other individuals such as like Tom Lee and the CEO of BlackRock, Larry Fink, has said that they're looking to digitize and tokenize almost any asset, any and all assets in the entire ecosystem of assets. And I think that piece has to happen first, and it hasn't happened yet. But for that to happen as well, we would need 24/7 or at least extended option or extended market times to be able to facilitate the movement of money at 2 a.m. or at 8:32 p.m. on a Sunday. So the stock market needs to, in its own case, also be available to move to be able to accept that tokenization and being um, put on blockchain and such. Um, so I think it's possible, but it needs some time. So yeah, but back to NVO. Real, I want to finish off this conversation of marrying the data. This particular order right here is something super, super important. So what this means to me, or what this order says to me, was that NVO, for sure, Dimes, got you. What this means to me um, is that, and also one more thing on the stablecoin topic. There is money to be made in that topic. Do I currently know how to potentially position and posture myself to make that, to make money or to find a market or find an opportunity in that? I don't currently know, but it is something that I am watching, and it is something that I do see a possibility of there being an opportunity brewing there. And when I do know and figure out what that is, it will definitely be presented in the integral post and the integral vote, as well as deeply written up within my research. But yeah, so this NVO order says to me that somebody, and this I believe happened December 10th, this order, somebody put um kind of, but it's okay. Somebody put 1.25 million on NVO, potentially stepping into $50 back on December 10th, right? So if we do that and then we take a look at where December 10th and then where we currently sit today, December 10th, it was trading at $49.38. And they have a great amount of duration on this contract with a June 18th expiry that we mentioned. This allows them to effectively be right in, they're currently in the money, at least where the price is currently trading at $52. And then it also allows them to be able to sit in this contract for quite some time to continuously get a meaningful upside going forward. So these are the kind of things that I take a look for when I see large amounts of money place these huge directional bets with duration. And another neat trick, if you open up your broker and you take a look, you see something in the options chain where it says bid, ask, volume, rah, rah. It's called open interest. That metric right there could be your best friend. That metric basically shows, right, the conversion of volume into what was actually held, right? So we look at volume and we say, "Oh wow, high volume, and people are buying a lot today, or people are selling a lot today," right? That's today's price action. That's today's transactions of buyers and sellers coming together and making a market, right? When you look at open interest in the options world, open interest basically effectively shows you how much of that volume stuck into the following day, into the following week, as well. So I'm going to give you another example of something that I've been seeing. And this is potentially a trade idea for 2026 that I really like. I just haven't been able to find much information really on the company. It's not covered that publicly. It's also, maybe not that known of a company. It's a $6 billion market cap company. It's $11. It's an 11 to $12 stock basically. But something super interesting has been happening surrounding it. It's a casinos gambling company, right? And we know that that sector of the world has been growing with prediction markets basically being a quasi casinos gambling scenario. Um, and me being based in New York, there's currently a gold rush, I feel, with trying to build out a casino. The Rock Nation and Jay Z and what was it, SL Green, where it was looking to put a casino in Times Square. That has been blocked as of recent, but I'm sure they're going to, try to figure out a way to come back to the table to try and figure out how they can go ahead and actually maybe comply with what New Yorkers want and people that are approving this bid for the casino to have it in Times Square, or maybe find a new location to place it. I do also know that there is a casino that's being under construction now, out in Queens, nearby City Field, and it's supposed to be as well as a huge commerce place with restaurants and um, you know place where you can go eat and enjoy times with friends and family. And City Field is the field that they use for the New York Mets. So it's going to be a lot of commerce there, a lot of products and services being sold there. And it seems like they're trying to build a casino there as well, um, and maybe even do some sports betting or some type of sports angle there. That's backed by Steve Cohen, the hedge fund owner of Point 72. Um, there's also new casinos being built out in Jersey. Like it's a big thing, right? DraftKings, also like the human psychology of it all, like the generation of us that we want to gamble on whatever this is, whether it's prediction markets with gambling tomorrow's weather being 29 degrees or higher, or who's going to become the next president or the next mayor of the town. It's kind of been ingrained in human psychology and the way we go about spending money, right? So, same thing, same thesis, roughly, right? I see how it comes back to the same thesis of where are we going to spend our money as individuals, right? We are looking for a way to fight obesity, as well as complementary to individualistic vanity and the importance of keeping a slender figure, XYZ, whatever, for the individuals, right? As to why these GLP, Eli Lilly is now a $1 trillion stock out of nowhere, one of the first healthcare companies to become worth $1 trillion. The reason why NVO and these GLP-1s are this generation's Viagra, as I've said prior to this. There's a change in human behavior with casinos, gaming, gambling as a whole. And that coupled with what I just mentioned, so why I like to watch large orders and why I like to watch them is because of this. And I'm going to wrap it all up with a pretty bow for us to understand that open interest topic that I mentioned before. And that is because of this SGHC. Time and time and time again, I've seen large sweeps, large orders get placed into this April 2026 $10 call. $310,000. Another one, April, $10, 300 grand. Um, SGHC up over the open interest on it up over 100,000 shares of people holding it, right? So this volume came into this call, this particular option line, April, um, I think April 17th, 2026, $10 calls as well as the $14 calls, right? 310K came in late November. 295K came in again late November, the same options call with a higher abnormality of volume. It's not used to this amount of volume. 1.7 times the usual volume, right? 280K came in mid November. You can't kind of see I'm covering it on this last one, but all that to say, right? And then if we come to what is called the open interest, we can see that the open interest on the April 17, 2026 $10 call that we've mentioned, right, has gone over to 100,000. And the 14 strike for that same expiry gone over 24,000, right? So now, as I'm a holder of this position and a person who believes in this potentially, right? I'm somebody who's going to watch the open interest to see how it continues to grow or see how it continues to decline, right? So these are the kind of data points that I present in the interval vote for all of us to be able to decipher and make our own decisions based off of, right? None of this is investment advice. None of it is. It's simply just a way or it's a presentation of the market data and what's happening in our eyes, and then I'm simply just writing on how I potentially perceive this data to mean something going forward. And if you ask me, a large accumulation of people putting 300K plus, and they've been doing this for month on month now to amass this 100,000 open interest on this SGHC stock shows that there's something here, right? It shows that they want some duration, right? Because they've been buying it since God knows how long, maybe August. I started seeing these large sweeps come in with large accumulation on this options line. Um, and then, and they're all focused on this April expiry. So they wanted duration since August for something, right? And if we look at what happened in August as well, or where we were price wise in August, if I were to say that a bit better, price wise in August, we were roughly where we currently are. So it was at $10.50 or at $9.50 roughly, right? So if they wanted to buy this option to collect on the growth, right, of it potentially exploding from $10 to 20 and sell the option and then just collect the profit and move on, why wouldn't they maybe step into the $12 calls or the $14 strike as we've seen, right? They kind of did, right? So it seems like some people are looking for the appreciation, but the main bulk of the open interest that we just saw, the $100,000, is looking at the strike price of 10. That tells me that this person may want to exercise that contract. And they're looking to place a bet on this option that by April, the company's gonna be worth well more than $10. And as of right now, as of last Friday's close, at least, we're already 20% above that. So they could potentially exercise that contract, right? And then take ownership of the 100 shares per contract at $10 of cost. And now they're owners of this company, maybe with a large equity ownership position, maybe for a buyout interest, like somebody's looking to turn this into some other prediction market thing, or maybe or maybe this is just an investor that just really believes in the company long term and thinks that it can maybe 5x from here or step into a $50 stock over time. And they're looking to try and do this in a massive position before April. So if you ask me, that tells me I'm looking to see what is going on in the casinos and gaming industry that that makes people believe that they should just buy this call, and they're doing it dramatically and doing it with a timetable of basically the next 4 months, right? So that gives me that point of view of, hmm, this company might increase in value dramatically over the upcoming months. That's kind of what you've seen here, right? We've already had uh, a 20% increase almost from being at this $10 price point and effectively continually bouncing. If anything, this is a put major at $10. If you guys follow the Gex or you guys watch some of my data points on that, we could talk about that a whole another separate stream. There's a whole 2-hour class within itself on just gamma exposure and what that means data wise. Um, and and I find this super interesting, right? That they're this, um, coupled with recently, I went to take a look at the institutional ownership of SGAC. Institutional meaning banks, right? Large firms, CTAs, hedge funds. Look at the steady growth of the SGHC stock. Oh gosh, in ownership, they are looking to own and create massive positions in this stock. They've continuously grown and piled into it, and they've done it over a long period of time. And just recently, we've also seen a pretty nice spike too. Just over this past, what is that? I think this is per month of a chart. A huge spike where institutional ownership jumped from what looks like almost just shy of 60,000 shares into roughly 80,000 shares. So if you ask me, if I were to again do a concept that I've just shared of marrying the data, options owner, people continuously sweeping this option, this particular price point, it's same growth that we've seen in in the in institutional ownership, as well as the macro theme of prediction markets and its growth there. Why is Poly Market worth $8 billion out of nowhere? Why is Kalshi the first prediction market that went FCC approval? And now all of a sudden valued super, super aggressively. And then on top of that, companies like Robinhood, they're established into the financial game, looking to create these prediction markets for sports and elections and all these other pieces. And also the concept of individuals saying, yeah, I'm gonna just, what's the over under on the Joshua Jake Paul fight, and the whole societal behavior impact of gaming, casinos, and where we are as a whole, as a society, right? It shows, right? It shows that there's an opportunity here. And it may not be DraftKings. It may not be Underdog Fantasy. I don't even know if that company is public or not, but another company that does gambling. It may not be Robinhood in a way, because Robinhood also has other arms of the business that are growing, right? So it may not be a pure play to be invested in Robinhood for this particular theme, for this particular thesis. It may be very important. And then look, here's another piece too. This is how you, what I would say, this is how you find winners, right? Because in that same sense, there are other companies that do similar things that have not appreciated or have not had its level of growth and its level of attention that SGHC has, right? And let me give you an example. Penn. Penn Entertainment, another company in the casinos and gaming industry that went ballistic during COVID when money was nothing, basically, right? Um, on top of the fact that Trump is also talking about a tariff dividend, right? What happened last time we had a $2,000 plus check come into individuals' pockets? We saw huge jumps in price valuations. But for some reason, Penn hasn't quite gotten the similar love that SGHC has in its institutional ownership, in its price appreciation, right? You've seen its net margins collapse from being roughly a loss of 1% to a gain of 6 to 7% to now being a loss of 50%. Mind you, there's some other things in there that have made it, it's lost. I think they recently acquired another company and they're looking to expand on that. That's why that the losses dropped dramatically. But this company's worth 2 billion, so a third of the price of SGHC. And if you ask me, SGHC is potentially more poised to actually be the winner here in this casinos gambling thesis idea, whatever this may be. So yeah, that's how I feel. Um, so another name that's on the 2026 watch list. Those are those two names for the 2026 watch list. This I kind of wanted to take a more zoomed out approach a little bit. We can get into what may happen this upcoming week if you're more so on the shorter term of trading. I personally am not too focused on the shorter term of trading um, per se, as least as of recent. So um, we could kind of take a look at this. Um, I have a trade that I do like on the shorter term frame of trading that I've married the data on in a way. Um, um, we've seen as of recent, um, we've seen as of recent some the sell off that we saw in the video from $200 down to 180 with the question mark of like, are we gonna? Is Nvidia still gonna win, or is Google TPU gonna fully take over? Like, what's happening here? Like, question mark, question mark. Um, into now, with its specific licensing deal that they just signed with Grok, valuing Grok at 20 billion. Um, the AI model, if you're not aware of that, it's an AI model that's owned by Elon, um, and they've Elon's basically put together the largest cluster of the NVIDIA GPUs. So I think it makes sense for them to have this licensing deal so that NVIDIA can continue to learn and gain more information on how to potentially make these large clusters as robotics maybe continues to potentially be a theme into 2026. How also other warranted things like AI is here to stay in a way of investments and where we're going. Um, but there's some interesting things that I saw as of recently. I guess we could go over the New Year's Eve flow. On these low volume days like New Year's Eve, a lot of these people in the markets get really cheeky. They try to get sneaky orders in these low volume days and try to move real G's moving silence like lasagna. You know what I mean? Like some real Lil Wayne going on. Um, and some of that, some of the reading flow that I came in sees a focus on CPNG, NVIDIA acquired this chip. That is better considered computing side of AI and randomness. I believe not Grok from XAI. Oh, darn. Okay. That's crazy. All right. So real time fact checking right here. Grok is able to use their custom async chips to serve LLMs at a really high speed. Okay, sick. Okay, way faster than most companies can. Even the provider model companies can't be as fast as Grok. Okay, so it seems like Grok is focused on speed here. If you guys are check the chat, just got fact checked a little bit by Cody. So seems like my initial analysis of the Grok scenario. Okay, not the one open. There we go. Not the one owned by. Got it. Grok founder Jonathan Ross and president Sunny Majdra joining NVIDIA to help scale its licensed tech, while Grok named Simon Edwards the CEO. Okay, interesting. So check the chat if you're not reading that right now. Cody just dropped some real important alpha. Um, so it seems like they bought Grok. So what I just said about it being Elon and the largest NVIDIA cluster, that's scrap it. Wrong company. GROQ, not GROK. So apparently we don't have enough words in the alphabet. So we have to name companies the same thing in the same industry doing the same thing roughly. But hey, whatever. Um, so yeah. So this is a whole other thing. So NVIDIA, I believe, stands to gain a lot from this with the speed, right? Maybe it'll be something that can compete with Google's TPU scenario, because that was the biggest headwind to NVIDIA as of late. Was, oh, Google's TPUs, like maybe we don't need NVIDIA chips as much as we currently thought we did, and like there goes NVIDIA, so the valuation slipped. And correct me if I'm wrong on that, viewpoint, Cody. Now of like, hey, they're working with Grok to create custom async chips to serve LLMs at a really high speed, similar to how Google's TPU chips can work like really localized and in a fast, high speed way as well. Seems like a play from NVIDIA to embed themselves in the infrastructure layer instead of just the hardware layer. So cool, good to know. And with that, I saw some flow into QUBT. I believe this is a block that was broken out, so it's probably a $250,000 sweep in total. But this person seems to be pretty interesting in QUBT. It's not super huge of a flow, but it's something to note as we continue to step into see more flow on this company potentially, or more flow in the industry as a whole. More NVIDIA flow, more silver flow, the usual, not anything super standoutish. I think the more super standoutish one that we saw was what I already talked about of, hey, SGHC and the 310K sweep that came through. More people focused on the April 10 calls, as well as what we just talked about, maybe maybe NVIDIA fighting back against Google TPU infrastructure, where now maybe the appreciation and value that we saw in Google as of late may come down a bit in the short term, as we see individuals like this put a $500,000 bet on the downside on Google with February. So about a month and some change of duration with 310s as the put side, right? So maybe the valuation swap that we saw when NVIDIA dropped from 200 to 180 and Google flew from God knows what into 300, I think, that we may see a little bit of a pendulum swing. Now, if you've been with me, for quite some time, if you just follow my content, you understand how much and how deeply ingrained or how focused I am in the concept. And I don't know if I made it or whatever, but I'm a deep proponent of pendulum economics in a way where what swings to one side can swing back, right? And I mean, maybe it's just not spoken in the word pendulum as much, but it is a simple concept of, what goes up must come down, or the other concept of, when the tide goes out, we'll see who's wearing pants or who's wearing shorts, um, because maybe valuation and money kind of comes against you in certain ways. Um, but I did also see some pretty interesting sweeps for the upside on MSTR. So leverage Bitcoin getting some love here. Not really sure what they're trying to do with that. Like we'll see. Um, I don't think that's something I want to touch per se. If MSTR is a very levered up company right now, in a bearish market in Bitcoin, as of recent price action at least. This I'm not saying it's not tradable. It definitely is tradable. It just comes with certain risks and certain knowledge that's required to be able to trade this properly. And it's not necessarily something that fits within my framework per se at the moment, at least. I have traded in the past. I've released research on it as well in the past. I was a huge proponent of MSTR. I owned like a ton of shares at one point, and then ended up swapping it out for the ETF IBIT because it just seemed a bit simpler, a bit less complex, and a lot less volatile for my liking. So yeah, Target also got some love. 353 grand, and somebody focused on the January 102 calls. Interesting. We'll see if that volume that we see here of 1,000 of 1,500 actually can stick on the company itself. Like what's happening in Target at 100 right now. Maybe some short term price movement can happen there. Maybe some announcements and some catalysts may come down the pipeline in the upcoming week or two into mid January that will print that person maybe 200% on that option, right? And that 300K ends up becoming a million. Um, Also, some BABA puts. Maybe somebody's a little bit bearish on China right now. And then also this one that we see ingrained here in NVIDIA, right? Back to that concept, back to that theory of, hey, maybe we get to see some NVIDIA appreciation soon. Somebody putting $1 million on the upside for it. Um, um, yeah. So NVIDIA, to me, it's looking like some pretty cool stuff is going on. Gold, huge sweeps on gold. People are looking for that bimetallism thing that we talked about probably the first 40 minutes, um, to potentially, step in. CPER, but also what I mentioned on copper, right? Metals, we see the flow. So we have the big macro story of the U.S. government, U.S. dollar debasement, all the things that go into it. It's the metals utility. We got global political risks that are going on right now with China putting blocks on silver exports, China putting blocks on rare earths, right? All those things. Um, and it's showing a lot of stuff that's going on. Um, Micron puts with some short-term duration. Maybe somebody's looking for some volatility there to try and catch a cool hit over the head to buy that Christmas Eve and maybe sell tomorrow morning. Or actually, no, that was same day expiry. So that was basically something that they probably already sold on Friday, or maybe even maybe there's some weakness there in Micron for about a day or two. So that was some short term large money, with that option being like 355 grand of money that was placed into that position. Um, Banks continue to rally off of the fact that interest rates are going to go down. So, you know, more and more money can be made by banks at this point. More and much more lending can be sent out and shipped. Citi seems to be a huge winner. Citi is one of the largest global banks, right? We do have a lot of large domestic banks, such as JP Morgan with a global footprint. but they're much larger domestically than Citi is. And when I mean domestic, I mean the United States. Citi has a solid U.S. footprint. Not as big as the Bank of Americas or the J.P. Morgan Chases and such, but they also have a massive global imprint in London markets, in um, I believe also Europe, French markets as well. So, um, and I've posted data as well in my here, just talking about the global output, commodities, and some other like macro lenses from Goldman Sachs and some other brokerages. Where was that exactly? To see like flow overall. Um, cool. Oh, I also want to talk about this real quick. Um, this is Evercore's point of view on things. Um, so they're talking about basically the 10-year bond, whatever. Not trying to get too deep into it, but Evercore, large firm, doing tons of research, going over themes. So basically, it says that I remain bullish from both the top down and the bottom up for the year end run through 7,000. So this person's projecting 7,000 for the year end run roughly into 7,400 projection for the Q1 and 8,000 projection into 2026 total. In that's the S&P 500. As weakness in the dollar, yields, which means bonds, US dollars, and then oil, gasoline, and inflation itself, right? Oh, I didn't even get into the inflation issue. Sheesh. Um, and the conjuncture of steeper curves, tightening spreads as the backdrop of a supportive and an abundance in market cap across sectors, sizes, styles, which will continue to drive the expansion of breadth. Now, when you say breadth across cyclicals, small caps, values, and ROW equities. And it coincides alongside the main ongoing theme that we're seeing of AI, tech, semis, and bull run, right? So when we say breadth, we mean the totality of the market. So if there are a thousand companies listed in the market, sorry, over the past year or so, really maybe 100 companies of that 1,000 have done extremely well, while another 400 to 600 companies have done okay, right? And then the remaining bottom 500 to 400 companies, if that's numbers right, is 1,000, yeah, have probably done break even to probably negative growth. Um, and that basically means that when they say breadth, they are expecting that companies that maybe did not do too well as of recently can find a way to begin to do much greater things and do better things as companies such as in the Russell 2000s that are more connected with rates and what's going on there, are going to be able to grow as alongside the main winners, the Nvidias, the Microns, the whole thing, AI tech semis bull run that we've seen over the past 2 years now, roughly. Um, Breadth in the sense of the totality of the market, the cyclicals, the small caps, the value names of the market that tend to not do too hot in a lower growth backdrop of higher yields, higher Fed funds rates, where debt is expensive to obtain, can now find their way to have growth alongside things and commodities such as the metals, right? Um, crude oil. Crude oil is pretty interesting, and gasoline. The concept from Evercore says crude projects meaningful downside as it breaks its multi-year top and gasoline's collapsed to $2 as well. It's very bullish on crude on crude and gasoline as a whole when there is a collapse in those commodities and there is an absence of a recession, right? So what that means to me is if these assets continue to fall lower and lower, and there's an absence of recession, as well as some other reports showing that there's a gluttony of supply at the moment, um, as well as what we marry with what's going on right now as to why Trump is potentially poking his nose in Venezuela and seizing oil rigs in Venezuela. For what purpose? I'm not entirely sure, but it's a sector that I want to look into. What's going on in gasoline? Um, it may not be something that, will be a trade that can happen tomorrow or even this upcoming month, but it could be something that is something to keep in mind as gasoline and crude reaches these lows that we haven't really seen in quite some time. I was recently in Atlanta. I'm seeing prices of gas at like $2.40. Um, Other places like Dallas that are really close to gas and oil rigs that are generally as just about as cheap as possible oil can be are also seeing a huge collapse in prices, right? Somewhere with an average of like $2.50 to $2.70 into the low ends of $2.20, $2.30 as well. So it's an interesting thing to see. And I'd be interested to see if we can touch $2 as like a maybe not a nationwide average because only God knows what's going on over in California, why they're offering still $5 gas. Like insane. I know that they have to do much greater things to get their gas over the Appalachian Mountains, right? Is that the right mountain group? Appalachian? No, I don't think it's the. Is that the app? Hold on. I'm sorry, y'all. I hate saying wrong things. I just need to check the maps real quick. Um, can you hear me? Oh, I think my AirPods just died.